already. 2 people. Must have been sitting and waiting. Alright, so let's get this party started. It is what's today? Thursday? It's Thursday. Hello. Hey, Pickled, whatever. I didn't get to see it all. Pickler. Favorite mailman. Hey, favorite mailman. Way to go. Just getting started. Okay, it is June 6, 2024. Just getting started right around 9:15 p.m. Let's get rolling. See who's showing up tonight. John's here. Big O. Hi, Kevin. CSL. Papa Mark Preppy. Cool bean. Huh? And Laurie's here. Hi, Laurie. And Bowser by B-Wise. Is that right? I'm not getting on these. It's going too fast for me. Don't get old. It's no fun. Anyway. Wowed 2022. Interesting. Daryl Benin. Is that right? Daryl. Sorry. My eyes are focusing tonight. You win. Yay. Alright, anyway. So let's get started. So as I was saying, it's Thursday. And it's 9 o'clock. Let's get ready to rumble. Okay, anyway. Alright, so here we go. Let's just get started. Why are we here? Well, we're here for dividend stock talk. What is it? Well, basically, kind of blank today. Anyway, let's just jump in. That's basically what we're here for. Safe, predictable, consistent, 1% per week. Hey, what's going to happen with NVIDIA? Sorry, dude, I don't do NVIDIA. NVIDIA. I don't do that company. Jack, sorry. I just don't. Sorry. Alright. Let's just jump in. Let's take a look at some stocks so I can get back into my groove. Getting started tonight's going to be a little bit awkward. So, futures, nope, sorry. I only do dividend stocks, particularly those companies that have increased their dividends for more than 20 years. Siri, we'll take a look at Siri. We looked at Siri last night. We'll take a look at it again. Why not? Okay, hello. What about TSL? Yeah, no, I don't do Tesla, sorry. Siri gives dividends, yes it does. Berkshire Hathaway owns Siri. Owns a lot of it. Yeah, no. The Driver Crooner. SCHLD. Yeah, no. That one, no. That one. Rich Real. SCHD, gain getting rich real slow. Yeah, I wouldn't do SCHD. I don't like it. Anyway, my mind is in a fog. Jane, sub you. Hey, cool beans. Alright, what do you think of QDTE? Oh, wow. Really? Alright, QDTE. Lovely. Can you put it in there? $44.93. It's a monthly number one, and I don't do monthlies. Now, the reason why I don't do monthlies, because I like to do dividend stocks for covered calls. Now, on a monthly, I can only do a covered call 12 times a year. Okay? What's that going to get me? 12, 15, 18% maybe? Okay, you might be okay with that. Nothing wrong with it, don't get me wrong. But I like doing companies that have weekly options. That way I can do it 52 times a year and I can get 50 to 60% per year rather than just the 12 to 18 this way. Any Mary Jane stocks you like? Sorry, Johnny Ringo, they don't have enough dividend increases. I don't even know if any of them have dividend increases. Okay, that's what I'm particularly here for. Safe, predictable, consistent, weekly cash flow. And I only can get that with dividend stocks. You need a video editor. Yes, I do. I'm just getting started, so this is kind of fun. All right, so, yeah, sorry, QDTE, no. Let me go to something that maybe you heard of, because I've never heard of that one. I know why you don't do monthly. What? Because you're buying it the last week of the month, premium's low. No, that's not it. Even if you go out another month, the premium's higher. However, with the premium being higher, okay, I still got to hold it for 4 weeks at a time. And if I'm not making at least 4% on one of these monthlies, which really ever do, I'm not making that equivalence if I do it one per week rather than one per month. Explain option trading. Oh my goodness, John, you're new here. Option trading, basically you buy a stock. You own the stock. Okay, it is yours to do with as you please. An option, it's kind of like a real estate option, or I don't know, think of it as a non-refundable down payment. Okay? If you like something, somebody owns a stock, they have the right to sell a call, which is selling your right for someone else to do with it as they please. An option, a call option, you get to buy a stock at a certain time in the future. So they have weekly options that expire every week, and they have monthly options that expire every month. Kind of like an insurance policy, yeah. Well, that's what they were originally intended for. But in this instance, with the covered call, we're buying the stock first, and then we're selling somebody the right to buy it from me at a certain time, which is weekly, by a certain date for a certain amount of money. Okay, that's what the whole thing is. Calls go in one direction, puts going the other direction, and there's so many combinations you can put the two together between the buying, the selling. There's a lot. But hey, Doc's here. How's it going, Doc? We'll take a look at Paramount. Doc, we looked at Paramount last night. All right, anyway, so as I was finishing staying before Doc interrupted, I prefer weeklies because it gives me more money toward the end of the year. What platform do you use? This is Thinkorswim through Charles Schwab. All right, so yeah, I don't like that stock, and I don't like anything monthly because I like weekly options. Stock options make more. Yes, that's true, Kenny, but that's not what we're here for. My main objective here is a safe, predictable, consistent 1% per week. And the way I figured out how to do it, which works for me, is buy a decent stock, sell somebody the right to buy it from me for basically the exact same price I paid for it, and I will collect a premium. Okay, premium's kind of like an insurance policy. The person, whoever buys it from me, whoever pays me for this option, okay, they're hoping it goes up. I really don't care. I just want that premium. And that premium, usually 1% or more per week. That gives me 50% per year. Now, I've been doing this for over 15 years. I just started recently sharing with you guys because I felt I needed to share. Randall Ray, good evening. I have Charles Schwab, so I have access to Thinkorswim. Yep. As well, I could use this to find calls. Yes, you can. You can go to thinkorswim.com, download it right onto your computer. The computer version is much better than the online version. Reggie Jackson, how are you? Jordan, how you doing? You're welcome, Jordan. Anyway, let's get back to what we're talking about. More examples of companies that do pay 1%. Now, you may like QDTE. I've never heard of them, okay? But that might qualify for WTF movie that I'm going to make. WTF, what were you thinking? All right. Let's go to one we all love, Hewlett-Packard. What's wrong with Hewlett-Packard? Hello, hello. Can you sell premium on a call and put on the same underlying stocks? Yes, you can. You can do a lot of weird crap. You know, you can put 4 or 5 options on one side, 4 or 5 options on the other side on the same trade. It gets really crazy with some of the stuff they do. But I only like to stick to one. Howdy, Mike. I only like to stick to one trading strategy because when I grew up, and if you don't agree with me, you don't have to. Where I grew up, there was a saying: "If it ain't broke, don't fix it." Okay, this trading strategy I created for my 9-year-old little girl. She was 9 when I created this. It had to be simple. It had to be safe, predictable, and consistent, and no way she could lose. So the only way I could come up with a trading strategy that would work for her was rule 1. Never buy something you do not want to own long term, because you just might. Stocks go up, stocks go down. Rule number 2, never sell at a loss. Rule number 3, make sure the company has 20 years or more of increased dividends. Because when the stock goes down, it's not an if, it's a when. That's all stocks do. They go up, they go down. The idea of this whole strategy is to buy it when the time is right. Best used on a weekly option, because we take a look at the numbers, we take a look at where it's going, we take a look at what it's paying. And then if everything comes together, then it's a yes. And it's terribly sorry if you end up with a company that pays higher and higher dividends every year. I mean, that's the consolation prize. A worst case scenario, you get a good company that you can buy, hold, and not have a problem with holding. Okay, because the stock market was originally intended for you to buy the company and hold on to it. But we're adding a little bit of a twist to it. But look at some of the companies' names I'm looking at. And I'm talking about T-Mobile, Heinz, Kraft Heinz, Bank of America, General Motors, Coca-Cola, Boyd Gaming, Hewlett Packard, Occidental Petroleum, Paramount, Mondelez. You probably heard of every single one of those. I mean, that's the quality of the companies I look at. Do you have a Discord? K, yes I do. Members only, sorry. I don't feel bad about that sometimes. So as I was saying, any one of these companies, that's the main objective. Number one, never buy something you do not want to own. If you don't understand it, don't buy it. If you can't explain what they do in less than 5 to 10 seconds, don't buy it. Don't buy something you do not know, okay, or you never heard of. Okay, you've heard of every single one of those that I labeled off. I have a whole bunch of lists of companies. Now, there's 9,520 companies trading on the stock market. That's a lot to choose from. But I only want the companies that are actually sharing their profits. That drops it all the way down to like 4,000. Okay, great. Now out of that 4,000, what do I do? Okay, I look at consistency with the sharing of the profits. That's simple. If a company is good. Have we ever looked at Boyd? Yes, Randall, we have looked at Boyd and we didn't like it yet. It's not that I'm not going to buy it at some point. I just haven't bought it yet. Because everything's got to come together. The numbers got to work and the chart has to be correct. Okay, because there's only, whoops, let's go take a look at the chart. Talking about charts, well, why not? Let's put in something that we like. Okay, let's talking about charts. There can only be one high of the year, and there can only be one low of the year. So once you figure that out, great. And it doesn't take that long. You look at the chart. Well, there's the high, there's the low. It doesn't take that long, really. PAA. Okay, so once you see what the chart has done this year, because I don't want to buy it at the high and I don't want to buy it at the absolute low. I don't. And you can figure that out in less than 3 seconds. Okay, high, low, yep, okay. And then go on to the next. What is the next? The next is the 90-day chart. Well, I want to see what people have been doing in the last 3 months. That's people like you and me. We're the buyers and sellers. We're the investors. Okay, we buy the stock. Okay, the stock goes up. We say, okay, time to take profits. We take our profits. It comes down. We says, ooh, let's jump on this again. And they go up, down, up, down, up, down. That's all they do. And once you figure out what we are doing, because we are actually doing it, if you think about it, you know, we're buying and selling stocks. We are creating this movement, okay? Not directly, but you know what I mean. Okay, so once I take a look at the 90-day chart, I want to take a look at the 30-day chart. Now, the reason why I want to take a look at the 30-day chart is because it gives me a much better idea of where, hypothetically, it should be going. A lot of ifs, ands, and buts. No, but think about it, okay? You can only have one high of the 30-day period, and you can only have one low of the 30-day period, okay? 30 days ago, where were we in that rhythm? Because that's what it is. It's a rhythm. It's an up, down rhythm. Think of it like a river or something. I don't know. Up, down. That's what it does. It goes up, it goes down. So where are we now? Well, here's your 30-day high, and here's your 30-day bottom. What happens when you get to a 30-day high? Well, there's profit taking. People take their profits and the stock comes down. But what happens when it gets to the 30-day bottom? People say, wait a minute. Macy's at this price? You kidding me? Let me load up. And that's exactly what happened. It's just a rip. It goes up, it goes down. I've never seen a stock do anything else other than go up or go down. That's all they do. Okay? So, once you figure out that, my hypothesis, my idea, my thinking is, there's the 30-day high, 30-day bottom, and it's going to go back up again. How far? I don't know. I really don't care. Why? Well, because when I buy it, I'm not looking for capital, oops, wrong one. I'm not looking for capital appreciation. I'm looking for this right here. What can I buy it for? $18.50. What can I sell the 1850s for? 41 cents. Well, what does that mean? Well, let's take a look at the calculator. If I'm buying it, if I'm buying the stock, when I say it, the stock, when I'm buying the stock for $18.50 per share, because this is what you call the trade grid, okay? You have the bid, the ask, the high, the low, the open, the close, the volume, everything you want to know about the stock that happened today. That's what it is. This number right here, the ask, is the price that I can buy it for first thing tomorrow morning. Pretty much close to it. It changes every 5 to 10 seconds. But usually, when she opens up, she'll give us a number. So, this number, 1850, if I buy it at 1850, I sell somebody the rights to buy it from me at 1850. That's the exact same price I paid for it. What was the purpose in that? What does the stock have to do? It doesn't have to go up. All it has to do is just stay right where it is. And what am I collecting? Well, I'm collecting 41 cents a share. Okay, well, what does 41 cents a share mean? 1.9, that's not it. That's the wrong one. Sorry, we're just getting started. 41 cents a share. And I'm paying $18.50 a share. This is going to give me what my rate of return is going to be. 1850, that's the purchase price. And that's 2.2%. Now, I'm trying to say 1% per week to be a little on the generous side, because I like 1% because it's simple, it's easy. Okay, every once in a while, I'll get thrown a 2% or a 3%. When I see them, I say, sure, as long as everything else checks out. Now, what do I mean by everything else? Well, I like the numbers, okay? I like the numbers, and I also like the chart. Look at 30 days ago, here we are, bounced down. And this thing is going to, at a 30-day bottom yesterday. She was up a little bit today. Let's open that up a little bit more so you can see it better. Oh, for those of you guys who don't know, this screen right here, this screen is live on YouTube right now. So that way you can see these numbers. Not that I'm making them up. You can't see them on your phone and you can't see them on your tablet. But if you see these numbers, this is what's called the option chain. Okay, 7/24. That's tomorrow. It expires tomorrow. This is what we're going to be keeping our eye on tomorrow. Okay, for those of you in the traders group, we want to see what these numbers are going to look like at 3 o'clock tomorrow afternoon. Okay, I go live every day. On Fridays, it's 3 o'clock. We want to be on an hour before the market closes. I want to see what the numbers that I sold it for on Monday, what is the value of it right now? Do I have to do this? No, I don't. I just like doing it every day. I make 580% trading ribbon. Good for you. We make 55 to 25% doing options. Good for you too. So with the option call chain, you don't care if they go up or down during the week. Well, basically, John, what I'm looking at is this should tell me, okay, here where it was 30 days ago. Hey, dip up, dip up, dip up, dip. And now we're at our 30-day bottom. The 30-day top was last week. So normally, what happens? It goes down and then turns around and goes back up again. I'm only looking to hold on to it for 4 or 5 days. That's it. I don't want to marry it. I'm lost 3,000. Okay, I have no idea who you are. What's going on with GameStop? All right, I don't do GameStop. They don't have 20 years of increased dividends. GameStop will be about, okay, whatever. Sorry, I don't do GameStop because it doesn't have 20 years of increased dividends. Anyway, and then they haven't even been around that long. Okay, so back to Macy's. If I like the numbers, if the chart is telling me one thing, I'm getting 2% for buying it at a price and selling it at the exact same price 5 days later. James, what stock are you looking at currently? Macy's. We were just saying it went up 70% today. Macy's didn't go up 70% today. Okay. Macy's is opened up at 1880, and now it's at 1840. Okay, so I don't know what you're talking about. GameStop did. Yeah, all right. Now, can somebody get rid of this guy, please? One of the moderators. I don't do those stocks, and I said it before. It's pure speculation. I don't do that. Simone is here. Now, I got to apologize because I don't do speculation. I don't. He's talking about speculation, and I have no desire whatsoever to do that. I'm at that point. Hold on. GameStop up about 25 share. Okay, yeah, big deal. AIPI. Trent. Never heard of them. AIPI. Usually, Trent, if I've never heard of something, that usually means it's not going to qualify for this strategy. Not that, my opinion's worth anything, and you guys should do your own. What's wrong with the truth? Oh my God. Not you again. LOL, GameStop is worse than playing a slot machine. Okay, covered call strategy just opened a few days ago. I don't know. Don't do GameStop. Okay. Covered call strategy just opened a few days ago. Really? Okay. How about Altria and AB? What is AB? I know MO is Altria, but what's AB? Alright, anyway, we'll get to those in a little bit. I got a big list to go from yesterday. Okay, that's why stop limits are for. Oh my goodness. Minor glitch in the system. PLTR Alliance Bernstein. Never heard of them. PLTR AB. Really? AB. Yeah, no. Sorry. That was quick, wasn't it? Let me tell you why, Billy. Monthly. Ooh, temperature. How can this thing? It is. It's getting hot. Okay. It's monthly, which means I can only do it 12 times a year. 12 times a year. No divvies with PTLR. Okay. Thank you. What was I saying? Oh, yeah, AB. It's monthly. I like covered calls. Covered calls are one of the safest strategies there are. It's the safest strategy there is. You buy a stock, you sell somebody the rights to buy it from you for the exact same price you just paid for it. You collect the premium, and the premium's 1% or more. 1% or more per week. That's over 50% per year. And it's not like, I've never heard of AB before. I haven't. But if you like it and the numbers work, why not? I just don't do monthlies because monthlies just don't pay the same amount of money. It's actually that simple. I have over 300 companies to look at that have 20 years of increased dividends and weekly options. Why would I want to look at something I've never heard of? And most of the stocks I do, you've actually heard of them. Let me go to the list again. Okay, Heinz Ketchup, Bank of America, General Motors, T-Mobile, Boyd Gaming, Coca-Cola, Hewlett Packard, Paramount, Mondelez. What else we got here? Wells Fargo, Siri, Apple, Capital One Finance, UPS. You've heard of every single one of those. I've never heard of AB before. Okay? Does it have 20 years of increased dividends? I don't know. Okay, so when I say I don't know something, if it did have 20 years of increased dividends and it did have weekly options, then I would know about it. I've been playing this game long enough. All right. Next on the list, next on my list, Southwest Airlines. Or was it Southeast Airlines? I forget. Southwest Airlines, LUV. All right, first thing I want to look at with LUV. Randall Ray, most of these suggestions are garbage stocks. People here at TikTok don't understand the strategy. Okay, Randall, you see my list of garbage? I have one all these days. This is all the stuff people ask me to look at. Okay? Now, I've been doing this for past 3 months. That's not a lot, but 3 hours a day, 3 hours a night for the last, what month are we in? 6 months? Holy cow. The last 6 months? And I've only got two added to my personal list. Okay, I see this stuff on a daily basis. You guys rattling off all these stocks. I'm thinking to myself, you know, I've been doing this for 20 years. 2 of them snuck by me. That was it. But yeah, when I say I've never heard of it, there's a reason why I never heard of it. Now, Brian, Clorox, yes, 100-year-old company, Dividend King. That is a good company. We'll take a quick look at it. Right, wait a second. We're looking at LUV. All right, I'll put Clorox down, CLX, and we'll get to it a little bit later. Yes, but you could be forced to sell it to someone else. How do you control the price? Yeah, love the hike. Huh? But I am still getting that projected 1% or more per week. I take a look at what can I buy it for, and then $27.90. So I'm gonna look at the 28.18 cents. That's for tomorrow. That's for one day. Holy cow! All right, and the 28 for next week, 56 cents. That's another 2% trade. First thing I want to see is what is my number? What am I buying it for? What am I collecting it for? And how much of a rate of return is that for the past couple of days? I mean, for the next week. Because this option here expires the 14th. That's not tomorrow. That's next Friday. That's 8 days away. Reminds me of the Beatles. 8 days a week. Or anyway, but 8 days from now that expires. So, if I'm going to own this stock for 8 days, where do I think it's going to go? Well, that's why I look at the charts. Very first thing I want to see is where's the high, where's the low, where was it a year ago, and where is it today? Okay? Takes 2 seconds. High, low, where was it, where is it? All right, maybe 3 seconds. But that's basically it. Do you ever sell a put? No, I don't. Okay, the reason being this was created for a 9-year-old. It had to be simple. When I say it had to be simple, it had to be simple. You're buying a stock and you're selling it for the exact same price or close to it. You can't get any simpler than that. Okay, if I'm buying it for $27.90, the closest strike price is the 28. Okay, and the 28 is going for 56 cents, which is about 2% for 8 days. It expires next Friday. So the important thing I need to know is the high is here, the low is here. Here we are right now. Where is it most likely going to go in the next 5 or 6 days? That's the $64,000 question. So let's take a look at a little more detail. Now, what do I mean by that? Well, I want to put all the odds and probabilities in my favor. Okay. First of all, we like the numbers. Great. Okay, it's going to give us a nice return. Now I want to have an idea of where do I think it's going to go based on where it's already been. That's what we look at charts for. We want the high, the low, what direction is it going right now. Okay? From this 1-year chart, it tells me a certain story. Now I want to break it down and take a look at the last 90 days. Okay, so what has it done in the last 3 months? Oops, that's the last 2 months. Let me go back a little bit more. There we go. Last 3 months. Okay, so 3 months ago, there's the high. Last week, there's the low. Where's it going now? The high is here, the low is there. That's the last 3 months, the last 90 days. Okay, gives me an idea of where it's going. It's basically kind of channeling, you know, kind of going side. I hate saying sideways, but it kind of channeling right there. So it's probably going to continue the same pattern because that's what we do. We buy, we sell. That's what we do. All right, so in the last 30 days, I really want to zoom in. So now I have an idea of where do I think it's going to go next in the next 5 to 6 days. Because if I buy it on Monday, I sell the option, I collect that premium, that's 2%, good for me. But where do I think it's going to be by next Friday? Okay, well, where's it been? There she was 30 days ago. Here was the previous 30-day high. Here's our current 30-day bottom. And look at where we are now, a new 30-day top. Well, what do you think happens on a 30-day top? There's going to be profit taking. So for me, even though I like the company and I like the numbers, I don't like where it is right now. Because you get all this profit right here. Okay? And it's already past the 30-day high. More than likely. Doesn't mean it's going to happen, but more than likely, people are going to start jumping ship and taking their profits. Because I got two really cool sayings for you. Number one, nobody ever went broke taking profits. And number two, it ain't a profit until you take it. Now, if I'm looking, my main objective is a 1% safe, predictable, and consistent. 1% per week. This is exactly what I want to see. I want to see stock going absolutely nowhere. I want to capture that 1% per week, but not today. Okay, we'll put that on the list for 2 weeks from now, because as soon as the profit is taken, it's going to come back down to here. Now, I only continuously look at maybe 24 or 30 stocks because I trade them over and over again. And there are companies you've heard. Halliburton is one of them. H-A-L, I write that down, H-A-L. Okay, Halliburton is one. Johnson & Johnson is another one, but Johnson & Johnson's usually a no. The reason why they're usually a no, they're so well established, they're so dug in deep, they ain't going anywhere, which means they're not really paying very good premiums. Not to say that the other companies aren't, because Macy's, we looked at, has been around for 100 years, and they're still in a good premium. Okay, that's actually one of my favorites. Okay, so that kind of explains it. I want to make sure I'm getting my 1%. In this instance, it would have been 2. But then again, I want to have an idea of where the stock is going next. I look at the 1-year chart, the 90-day chart, the 30-day chart, then I break it down to look at the seasonality. And what's the seasonality? Well, that, my friends, is 10 years worth of data. Okay? The blue line represents the movement for this year. Okay, this is what it's done this year so far. The red line represents the average movement over the last 10 years. Because that's what I have it set for. I can have it set for looking at 20 years of data, or I can have it set for looking at 5 years of data. But I prefer 10 because it's a nice number. Okay? If 5 years is not enough history, 20 years is too much, 10 years is kind of good. We can't see the calculator or the chart on YouTube because of picture-in-picture. Oh, there's 2 YouTube channels. One YouTube channel is me with camera. The other one is just this screen alone. Okay, nothing else but just that screen. There's 2 YouTube channels. So go to the other one. Where was I? Oh, so what does it normally do this time of year? I'm going to zoom into that the next 2 weeks. Tiny bit. I mean, it's not huge, but let me zoom into it. Okay, we're right here on the where the blue dot is. Okay. Okay, we're right there where the blue dot is. Cross section with this one. Look what she's doing. She's going down just a tiny bit for the next 2 weeks. And what does the normal chart show us? Okay, the normal chart shows us she goes up, makes an M. Check that out. Now she's going to come back down again. Remember, she's been staying in that channel for the past 90 days, staying between certain prices. Well, she's doing the exact same thing again. She's going up to a certain point, made a new 30-day high. So usually, now this is not guaranteed, but usually that's a perfect opportunity for it to start coming back down again. Okay, now I do suggest this is all for entertainment. You guys do your own research and figure out if that's what you like. Because it always comes down to rule number 1. Never buy something you don't want to hold. If you don't want to buy Southwest Airlines and hold on to it, then don't buy it. It just so happens to be on my list, and I like it because it has consistently increased their dividends. And the numbers work. But not this week. I'm going to wait maybe another week, maybe next week, and it'll pop back up again. So one of you guys want to keep that in mind. Wait a minute, I'll write it down for next week. We'll take a gander at it again. You know what? I'm almost positive that someone between now and next week is going to be asking for this exact stock again. Hey, Mamas is here. How's it going, Mamas? Mamas, don't let your babies grow up to be cowboys. How about ULTA? You know, ULTA, I'm pretty sure that's going to be a no. Because it does not sound familiar at all. ULTA. Ulta Beauty. Interesting. I'm saying no only because I don't do stocks over 250 bucks. Sorry, Casey. You want to do Estee Lauder? EL. Spiders, no. I don't do spiders because spiders doesn't pay dividends. Okay? I like to collect dividends. Alright, so let's get back to where we were. Okay, ultras and no. Next on the list is Hewlett Packard. Ooh, Hewlett Packard. HPQ. Now, tell me you've never heard of Hewlett Packard. Come on. Hewlett Packard, first thing I want to look at is what am I buying it for? $36.28. The closest strike price is going to be $36.50. It's going for 11 cents per tomorrow. I could buy it and make 11 cents tomorrow morning and sell it for more than I paid for it and still collect a premium. That's freaking cool. I could do a $35.50 and catch a nice premium too. Guaranteed to be called out. But next week, anyway, look at the number for next week. 32, just barely 1%. So you have to ask yourself a question. Do I like Hewlett Packard? It's not giving me 1% this week. Shall I go on further and take a look at the numbers? Or shall we just look at something else? Because we already know this number doesn't work. Alright? I'm looking for 1% or more. I'm not looking for 0.8. Okay, so that one doesn't fit this week. Okay? We'll keep our eye on it. Hewlett Packard's a good company. It comes up every 90 days. Now remember, every stock that I trade has a dividend, and that comes every 90 days. So if I set up my calendar to look at the exact same stocks every 90 days, because you see Kroger right here, okay? After Kroger pays out its dividend, Kroger won't show up again on my screen until another 90 days. Because it's the same list every quarter. Quarter number 1, January, February, March. Quarter number 2, April, May, June. Quarter number 3, July, August, September. Quarter number 4, October, November, December. It's the exact same list. Quarter after quarter after quarter after quarter. Now, it only takes me 10 or 15 minutes to do my own trading. But I feel compelled to share, so it takes me a little bit longer nowadays. It gives me something to look forward to also. I like sharing. Okay, so anyway, I only trade stocks that I know. And they pay their dividend every 90 days. So, if I'm looking at Kroger today, right, next week I won't look at Kroger again for another 13 weeks. Because it's 13 weeks and a quarter, and every 90 days Kroger pays a dividend. So that's when I want to look at it. Why? Well, because stocks have a tendency to go up before the dividend date. People like to capture dividends, and they have a strategy called dividend capturing. I also do that strategy, but that's not what I'm teaching here. What I'm teaching here is covered calls, which is a safe, profitable strategy. Okay? I buy it 2 weeks before this. Okay, I make my little 1% profit. I get out and I say, thank you very much. See you again in 90 days. And then I move on to the next company. Oh, look at the next company. Chevron, Heineken and Payne, Moody's, Visa. Those are all basically household names. It's like we've all heard of them. So why aren't they on your list? If they continuously increase their dividends and continuously give me over 1%, why wouldn't I just leave them there? Seth, nice to see you again. Anyone else see the chart video on YouTube? Picture? No, that one, the camera overheated. Yeah. I don't know, out of all the cameras I have, this is the only one that overheats. Let's give it a try again. Okay, let's see. Yeah. Sorry, I gotta get YouTube up and running again. Not now. Uh-oh. There it is. Go live. Oh, goodness. Dividend stock talk. Alright. Almost. No, it's not made for children. Why do they ask, is it made for children? What do people up to? I gotta Yeah, a little higher. Because it flashes a camera. Alright, there we go. Alright, so YouTube should be up and running again. Alright, where were we? Got interrupted. What app do you use? Alright, this is not an app. Okay, this is not an app. This is Think or Swim. It's a trading platform. You can download it free. Okay, but if you want to actually trade real money on it, you have to open an account at Charles Schwab, because Charles Schwab owns this. Okay, it used to be a separate entity, but it got bought out by TD Ameritrade. Then TD Ameritrade got bought out by Charles Schwab. It's all part of the circle of business life. Circle of business life. Al, howdy, howdy. Picked up STM this week. Was a good pick. Okay. I don't know who STM is. Let's take a gander at Seth's good pick. What is it? STM. Okay, STM Microelectronics. 45. It's a little choppy. It's a monthly. I wouldn't have done it, but you know, she did move up nicely today and yesterday and the day before. Nice little movement. Cool. I wouldn't have done it because it's a monthly. Okay, and I've never heard of it. Alright, so let's get back to my list. GILD. Gilead, is that right? Gilead. 64.13. 64.26. That's for tomorrow. That's still not that bad for tomorrow. For next week. Nice. 51% there. Okay, let's look at the chart. There's the high, there's the low, here's where it was, here's where it is. It's right near the bottom, so I want to zoom into this, and I want to see what that looks like. Because when is the best time to buy? The best time to buy is the bottom of the year, okay? And it looks like the bottom of the year was right there. So if that's the bottom of the year and she's starting to go up, where do you go from the bottom? That's a logical question. I mean, that's a logical answer, a logical deduction. Okay, you can only have one high of the year, and you can only have one low of the year. And you all heard that old story, but yeah, buy low, sell high. Well, you can't get any lower than the bottom of the year. People think that they're losing money here. No, you're setting up an opportunity to make money. Why? Because it's falling down here. People are abandoning the ship, taking their profits, whatever you want to do. But it goes from the high of the year down to the bottom of the year. What happens at the bottom? Well, that's when the big fish come out and start eating up. That just came to me on top of my head. But think about it. Because it can only be one top and only be one bottom. Okay, do you really think this company's going to go out of business in the next couple of months? No. They're going to be here and continue making profits. More of these little check marks. And as the dates roll by. So what's going to happen? This is the bottom. And a lot of people are going to see, hey, that's the bottom. Let's jump in and take a little bit of right. Now for me, I just want the 1%. Okay? I see it bouncing off of this. Great. Take that ride, get my 1%. Great. See you again in 90 days. Which one is that? Gilead. Hello there, Mr. Gada or Mrs. Gada. I don't know what that was. Just the stock. Alright, just joined. What stock are we looking at? We're looking at Gilead. Gild. How's the shoulder? Well, you know what? I was doing something yesterday I shouldn't have been doing. I hurt like hell. So, nobody's fault but my own. Thanks for the valuable info. Cassie, nice to see you again, Miss Cassie. Breadwinner 85, I don't do spiders, they don't pay dividends. There's no consistency in that. If you have an entity that doesn't share their profits, why do I want to look? Okay? I'm old, I'm retired. Okay? Retired, not retarded. Okay? I want to make a consistent weekly cash flow. I don't know if I should have said that now. Do I need to apologize for anyone? I don't know. Sorry. Just flew out. This is my first time here. Cassie, well, all right then. Nice to see you. I hope you're learning. Okay, now this was created for my 9-year-old daughter back in 2008. Yeah, I think it was in 2008. Okay, so in 2008, I created this for my 9-year-old daughter. It had to be simple, safe, predictable, consistent, all that kind of nice stuff. I'm new here. Can you tell me what you are teaching? Dividend investing for weekly cash flow. Safe, predictable, consistent, 1% per week. How's that? Simple, safe, predictable, 1% per week. That's over 50% per year. Using nothing but pre-qualified dividend stocks. And those are companies that increase their dividends to the shareholders. That's the sharing of the profits for more than 20 consecutive years. That's what we're doing here. Yes, I am learning so much. Cool beans! Look at the 5-year. It might keep going down. All right, new guy, you're going to pee on my parade, aren't you? I'm not really concerned about the 5-year. Okay, my main concern is the next 5 days. Because if I buy this thing on Monday, okay, or if I buy this thing tomorrow, and I can make 1% or more, as long as it stayed exactly where it is by next Friday, and she's bouncing off of a bottom, hey, I'll take the 1%. Can you check YouTube? Can't see the chart. Your video is blocking. Really? No, I'm not sure which one you're looking at, because there's 2 YouTube channels. Okay, one YouTube channel looks just like the TikTok video, okay, me standing in front of the screen. The other YouTube channel, Banana Boy, how you doing? The other YouTube channel is just the screen, nothing else, just the screen. I think I'm up in the top left corner though, but just the screen. Okay, so that's why you can be able to see the numbers. You know, if you're sitting in front of your big screen TV or on your computer, you can see what these numbers are. Okay, you can't see these numbers on your phone. Yeah, I'm saying this and people are abandoning here and going to the other ones. Alrighty, lift the 5-year. Okay, can you check YouTube? Can't see your chart. ABT, Brian. I am from India. It is relevant here. That's a good question. To be 100% honest with you, I have no idea about the stock and options market in India. Don't know. Hey, do you have a PC, a PS, or an Xbox? Yes, I do. But don't ask me if I know how to use them, because I don't. That's why I have 6 cameras tonight. 6 cameras going because I don't know how to use the stupid software. Hey, fascinating football videos here, and Brian wants to look at Abbott Labs. ABT. Added it to the list. Probably won't get to it tonight because we have so many other ones. How long have you been doing? How long you been doing the market? Over 20 years. Okay, now, I'm not looking for anything fancy. You got a mean codes? No, I don't do that. You should play with me. Oh my goodness, I have no idea what that means, but it didn't sound good. All right, let's just continue on. Okay, what we're gonna look at now? AIPI. Who came up with that one? AIPI. Yeah, that's a no. It has no options. Altria. MO. Altria is always on the list, but Altria is going to be a no this week. Okay? I forget who offered it. The reason why it's going to be a no this week, because it's at the high of the year. It's never been this high this year. Okay? It's never been this high. So what would make me think that it's going to go higher? Okay, I don't play that game. I like simple, safe, and predictable. Here, it's telling me it's getting ready to come down. There's going to be profit taking. That's what it's telling me. Is that what's going to happen? No, I don't know. That's the way it looks, and it makes me uncomfortable. So no, I'm not going to do that one. 46.80, closest to 47, and it's not even 1%. That clinches it. Okay, 1, I don't like the position of the chart, and 2, it's not giving me 1%. So, no to Altria. AB. Didn't we already look at AB? Yeah, we did. AB was a no. Halliburton. HAL. Yeah, they should be doing well with all the new government contracts for, what do you call it? Okay, where were Halliburton? Let's take a look at the numbers for Halliburton. 33.88. The closest is going to be the 33.50s. You got to be kidding me. That can't be right. They're giving over 1% for tomorrow morning. How much overall returns have you made over the years? I average over 50% per year. Okay, I'm already up to 28% in this account, and we're in week 6. Yeah, okay, if I continue that, I should make 50%. Alright, so anyway, what was I saying? Look at the number. Okay, if I bought it for $33.88, the closest strike price is going to be the 34. The 34 is going for 14, but the 33, the 33.50 is going for 41. We're going to take how much off of that? 38. Yeah, it's not good. Alright, so anyway, next week's nice. Okay, so I like it next week, but let's take a look at the chart. First thing I want to see, where's the high, where's the low, where was it, and where is it now? Okay, so it doesn't take that long to figure it out. Where's the top, where's the bottom, where are we going? Once we figure that out, let's go to the last 90 days, because I want to see what this thing has been doing lately. Okay, this is the 90-day chart. No, yes, there is an indicator. I'll get to that in a little bit, remind me. Okay, 90-day chart. Very first thing I want to see, where's the high, where's the low, where was it, where is it? Okay, was over there, 35 and a half, 90 days ago. Topped out around 42. Okay, came down, bounced, down, bounced, down, bounced, down. Look at where we are now. We are officially at the bottom of the year. Okay, is it the true bottom? No, we don't know until it turns around and starts going back up. So this would be a good one to keep our eye on first thing Monday morning, depending on when the dividend is too, of course. Okay, because look, the 90-day high, she drops down to here. Where do you think it's going to go next? Do you remember that old saying, buy low, sell high? You can't get any lower than the low, and it's at the low. So as soon as she turns around, it starts moving back up. And you got to figure out how many up days in a row is acceptable before you jump in. For me, it's 2. Okay, now today was a green day. If tomorrow is another green day, then I will be jumping in on Monday. And that's like a perfect setup for Monday. I rode Hall down. I have no idea what that means. Al, I rode Hall down. Should have went up this week. Guess not. Well, Secretariat. As soon as we find the bottom, okay, now that could have been the bottom, because it kind of looked like the bottom. But there's only one day of the upside. Okay? The very next day wasn't the third. Okay, so you have 2 days to the upside, okay? 2 days. Then I jump in first thing in the morning. But first thing in the morning here was red. You see that? Because you're right. Last week did look like the 30-day bottom. And it wasn't, because the 30-day bottom was, no, that's a 90-day bottom here. But it is the 30-day bottom. You're right, that should have been it. But it wasn't. 1 green day, 2 green day. Now I'm waiting to jump in first thing Monday morning. But first thing Monday morning, she's red instead of green. So that wouldn't have been a wise idea. I'm in Halliburton at 37.82. Let's look at the last 30 days. Last 30 days, right there. All right, so 30 days ago, we're at 37. Okay, slow. Look at the slow incline. Slow incline to the 30-day high. Okay, you can't mistake that for anything else on this chart. That's the 30-day high. And from there, she drops. Recover, drop, recover, drop. Look, down 3 days, up 1. So up 2. Down 1 day, up 2. Down 3 days, up how many? It's a little bit of a pattern. So what is it going to do next? This could be the 30-day bottom. Might be, might not be. So I want 2 days to the upside, and then I'm going to jump in on the 3rd day, right at the market open, as long as it's green. What, Ricky? 37.60. Okay, so 37.60. Yeah, that's kind of up there. So you got a couple of choices. I'm assuming the option that you sold this week is probably going to expire into nothingness next week. So we have a choice. Do we sell? Where are we? 37s? What's the 37s next week? 37s next week is going to be less than 5 cents a share. Or do we dollar cost average down? If you're up here at 37, you dollar cost average down from here. you meet in the middle, 35.50. But it has to be okay with you. You know, a lot of people do that. Do you teach price action? I don't know if that's what you call it, but that's not what I'm teaching. Okay? So you have to ask yourself that question. Is it wise to put more money into this, to do dollar cost averaging, or would my money be best someplace else getting a better return? That's when I tell you it's all about the numbers. Okay, so when it's all about the numbers, you got to calculate where is my money best suited for me for this week. I have found in my many years of experience that people spend more time planning a weekend barbecue than they do their personal finances. So this personal finance little journey is less than 10 to 15 minutes a week. Okay, so if you can take whatever account you have, okay, if you got 100 grand, cut it in half, 50 grand, that's what this kind of information is worth. 50% rate of return per year. Okay, hypothetically speaking, you should be able to get 50% per year at 1% per week. Okay, safe, predictable, and consistent. What am I looking for? I'm looking for a good company, Halliburton. Okay, I want to make sure the numbers work. If I'm buying it for this, and I'm selling somebody the right to buy it from me for that, and I'm collecting 1% this week, a couple of questions I need to ask myself. Do I know who they are? Am I okay with buying them and holding on to them? Because you just might have to. Rule number 1, never buy something you do not want to own long term. Rule number 2, never sell at a loss. Okay, rule number 3, 20 years or more of increased dividends. Rule number 4, weekly options. Okay, because I want weekly cash flow. The only thing that gives me that in this little monopoly game of stock market is a covered call. It is the safest, easiest strategy. Rule number 5, make sure the numbers work. Okay, I'm getting my 1%. The 90-day looked okay, the 30-day, the 1 year looked okay, the 90-day looked okay, the 30-day, look at it. I'm looking for the bottom. When I find the bottom, because this is a possibility, like last week was a possibility. Okay, 2 days, third day, this is when I would have gone in, it would have been a no. Okay, today's one green day, so I'm waiting for another green day, which is Friday. That puts me in a perfect position to jump on this on Monday if it opens green. You know, third day to the upside. Okay, so third day, I'm at the beginning of the market. That's what I like. I'm not doubling in on the other dog, Hormel. Secretariat. Well, let's take a look at Hormel. H-O-R. Whoops. H. No. Uh-oh. HRM? No. Why can't I think what? Thank you. HRL. I'm drawing a blank. I'm drawing a blank. Alright, so Hormel, a year ago, we were at 40.52. We had a triple top at 41.79. Once in April and twice in August. Okay? There's our triple high right there. That's the high of the year. So where do you want to buy it? You want to buy it near the low of the year. Almost the low of the year. Right here. We missed that opportunity. It can only be one low of the year. There it was. Okay? She was up. Now she pulls back. And some interesting things happening right here. And I want to zoom in and take a look at that. But the 1 year chart, first thing I want to see. Where's the high? Where's the low? Where was it? Where is it? Okay, now I want to look a little bit deeper because right here is intriguing me. I've got you all me. Okay, that's weird. I got you all me. My cost basis on Halliburton is 46. You don't lose if you don't sell. That's true. Okay, rule number 2, never sell at a loss. And besides, I like Hormel and I like Halliburton. Okay, either one. So the longest I've ever held anything, just let's think of it as a contest. Okay, see if you can hold it for longer than 9 months. Okay, I held on to PPG. No, wait a minute. No, it wasn't PPG. Hold on a second. PPG, Target, and Kimberly-Clark. I held on to Kimberly-Clark for 9 months. I got 3 dividends, and I got like 20 premiums. Okay, I took it down, I took it back up, and I sold it at a profit. Everybody was happy, but I held on to it for 9 months. Okay, so a small portion of my money got tied up for 9 months, but I did make money off of it every single week. As the stock went down, I lowered my expectations. But now I watch it every day, so I know what I'm doing. I don't suggest you play this game until you understand the risks involved. Buy a stock. Make sure you like it. Make sure you want to own it. Never sell at a loss. Make sure it has weekly options and 20 years of increased dividends, and then make sure the numbers work. Is it going to work for you? Okay, do you mind? I don't mind holding on to Hormel. It's a dividend king. It's been around for over 100 years. They've increased their dividends every single year for more than 5 decades. Why am I not? Well, they just got in at the wrong time. Not that we knew it was the wrong time when you got in, because probably everything pointed holy cow, I want to take a good look at this. Okay, so it intrigues me. So we have our 3-day top, okay, towards last year. Here's our bottom back in February. So let's zoom into that. Okay, so our bottom in February is 28.46. So that's the bottom of the year. Where are we now? Well, we're not even close to the bottom. Okay, 30.88. The bottom of the year is 28.47. So it continues to go down until it says, all right, this is enough, and then goes back up again. So apparently, here wasn't okay. We're down to here now. What happened? Well, first of all, they're going to continue increasing their dividends every year, regardless of where you jumped in on the merry-go-round. Think of it as a merry-go-round, because it changes every 90 days. Every 90 days it pays a dividend. Think of it as the brass ring. You're going around, here's that dividend. Going around, there's that dividend. They're going around the king. So, but you have the opportunity to bring in cash flow every single week. Better than, wait a second, I was going somewhere with that one. If the stock gets 5 or 6 strikes out of the money, you can't make premiums. Yeah, Mike, you're right, but that's when you lower your expectations. All right, but you got to follow it on a continuous basis. If you're not going to commit to follow it on a continuous basis, don't do it. Understand the risks first. Okay, so let's say hypothetically, I bought it at 35. Okay, let's say hypothetically I bought it at 35. Okay, she goes up and I sell off a contract. It doesn't hit my strike price. So then she starts to drop, and then she keeps on dropping. Okay, so right now she's at 30, but yet I'm in at 35. Okay, all this space up here is going to have no value whatsoever, right? So there's no value in these options, but there are value down here. Now, whenever I do that, the risk is, if it goes past that, I could have the stock called out, and I could lose a little bit of money between the purchase price and the sales price. But that's a risk I'm willing to take. I go 4 or 5 strikes out of the money. Why? Because 4 or 5 strikes out of the money are still paying. I'm bringing it. I'll give you my cow analogy. If I bought a cow and a cow gives me a gallon of milk every week, all right, I'm happy. What happens if the cow only gives me 3/4 of a gallon or a half a gallon? Do I get rid of it? No. I even keep that cow and it gives me a cup of milk, as long as it's giving me something going into the next dividend. Because what's going to happen? Year after year, they increase their dividends higher and higher and higher. That's the game. Safe, predictable, consistent 1% per week. Now remember, the 5 criteria. They had to be safe. They had to be simple, predictable, consistent, and no way my 9-year-old daughter could lose. Okay? If I buy a good quality stock, I like Hormel. The Dividend King's been in business over 100 years, always increasing their dividends. Okay? I have no problem holding it. Look at the numbers. If I'm buying it today, or tomorrow morning, at 31.44, it's giving me 30 cents. Between 30 and 35, I could barely make my 1%. Okay? But here's the thing. If you had it at 35, the 35's not worth anything. So you have choice. Either this is the bottom, which I don't know yet because it's not clear. Remember I told you like 2 days to the upside? Let's zoom really close into that. There isn't. There's 1 day. Here's your 30-day bottom right here. on the 5th, which was yesterday. Here's today, 1 green day. Great. So Friday would be 2 green day. Great. Now I want to jump in first thing Monday morning, if Monday morning's green. So if Monday morning wick goes up higher than it closed on Friday, great, then I'm in. If not, I'll wait till you make the bottom. If it jumps over your call price, do you have to buy to close? Yes, you do. That's why Trent. Okay, that's why I tell people. Was it Trenton? Sorry. That's why I tell people, when you look at it every day, you have an idea which direction it goes. Okay, when it's going that direction, right, and you're making a profit and it comes back down, you do have that risk of being called out if it goes up past the call you sold. That's part of the game. That's why I like looking at it every day when I'm in that situation, because I think I am in that situation with AEO. Let's pull up AEO real quick. Okay. See, I'm in this exact same situation with AEO. See, I'm into it at 25.97. 25.97 is off the chart. Okay? Now, I have the opportunity to dollar cost average down on that one next week if I want to. Because right now, the stock's at 21. I'm into it at 26. So which one did I sell? I sold at 24 and a half. It didn't give me 1%, it only gave me 4 cents per share. Well, 4 cents per share multiplied 1,900 shares. It's not a huge amount of money, but it's that quart of milk, that cup of milk, that pint of milk. I'm talking about my cow analogy. Okay, this is my cow. My cow's getting a little thin at the moment. Okay, so it's only giving me a quart of milk. It's not giving me a full gallon. But I'm not going to get rid of it because it's against my policy. It's against my rules. Never buy something you don't understand. Never sell at a profit. Never sell at a loss. Okay, AEO, I have no problem holding on to it. I don't. Okay, they pay a dividend, and I collect that dividend, and it gets higher and higher every year. Now, preferably, I'd like to be out of it. Okay, because I bought it in April. Where in June? Okay, I had it longer than I want to have it. But, you know, I'm making something on it, and I'm still averaging over 1% per week, and that's the name of the game. 1% safe, predictable, and consistent. All right, next on the list. Hormel had no premiums, even one strike out of the money all week. Ugh, sorry, man. If you average down and some of your options hit strike and some don't, which shares do you sell? Oh, it's interesting because that's the second time somebody asked that question. Okay, so if you buy let's say you buy 200 shares at 25 and you buy 200 shares at 22. Okay, you now have 400 shares at somewhere around 23.50. They average them down. It's not like, oh, you still stuck with these stocks. No, it's just the value of the stock. Nothing happens to the stock, just the value changes. But when you have 200 at 25 and then you buy another 200 at 22, okay, your average price is now in the middle. It's easier to sell in the middle than it is up at the top. Make sense? The highest strike involves the lower cost shares. No, it doesn't work that way. Okay, it's like, I was going to say when you mix white and red, swirl them together, make pink. So red this price, white this price. Now it's all pink, however you want to look at it, or black, white, all together, gray. However you want to do it. Okay. But dollar cost averaging is bringing the higher dollar value down and bring the low dollar value so you meet in the middle, so it's easier to get out in the middle than it is at the high. The higher cost, nope. If you bought at 28 and you sold at 28, then later that week you bought the 20 and sold the 20. Yeah, well then it's separated then. Once you separate them, okay? So if you buy 200 stocks and you sell the option against it, that's one trade. If you buy another 200 thinking your dollar cost averaging down, you're not, because you already have those committed to the option that you already sold against them. Once you sell an option against them, it locks them in at that price. So you could buy it at $1 a share, okay, and sell those options at $1, and sell the ones at 28 also. But no, dollar cost averaging is where you come together. So instead of selling two calls here and 2 calls here, you can sell 4 calls here. That makes sense? One strike doesn't, and which one does? Yeah, yeah. Fidelity lets me pick. Well, alrighty then. Well, yeah, if you're going to separate the two, okay, if you dollar cost average out, and if you separate the options, okay, you have 400 shares, okay, you got these ones at 28, got these ones at 22, and you want to sell a 28 call and you want to sell a 22 call, yeah, you could do that. Okay, but once you commit an option with a set of stocks, okay, then that takes that out of the game until that option expires. All right, anyway, let's get off that topic and start looking at some stocks. That's what we're here for. We're here to look at what stocks look good and how does it make sense. I keep them separate. Yeah, well, if you keep them separate, then they're 2 separate entities. But if you're going to dollar cost average down, then you're mixing the 2 together. If you're not dollar cost averaging down, then they're 2 separate trades. Okay? I dollar cost average down because I don't want to hold on to it. And it's easier to sell at an average than it is to sell at a high. Alright, let's go in for that fast nickel rather than a slow dime. Pfizer, PFE. PFE. See how quick that was? Why? Well, because I do Pfizer. It's on the list. New guy. Alright, so next on the list that we're looking at is Johnson & Johnson. Oh, so that gives you my brief explanation that that's exactly where I am. Because I bought my AEOs way up here in 26. Okay? Okay, I ain't going to see 26 for a couple more weeks. Okay, fine. But if I buy here, then I take that 26 and I mix it with the 21, now I'm at 23.50. And 23.50 actually has some value to it. So I throw a little bit of money at it. I lower my cost basis down, allows me to bring in cash flow. And that's my main objective. Cash flow, safe, predictable, and consistent. 1% per week is what I'm aiming for. Okay. BAC, Bank of America. I have mixed emotions of BAC. I do. Okay, we're looking at Johnson & Johnson next. J&J. J&J is usually a no. Reason being is because the premiums really aren't that great. 146.60, the 147s go for 28 cents. These 147s go for 116. There's no 1% there at all. Okay? I love Johnson & Johnson. They've been in business for over 100 years. They are also a dividend king. They've increased their dividends for over 50 years. That's 5 decades. Higher and higher dividends. Great. It's a great company. But the premiums aren't giving me the 1%, which is what I'm looking for. All right. Next on the list, Estee Lauder, EL. Okay. 124.98, the 125s. 150. That is over 1%. Okay, great. So the numbers work. Now let's see what the chart looks like. Okay, just because the numbers work, not automatic. We still got to take a look at the chart, make sure the numbers are working. Okay, Matthew Marshall, how's it going, dude? All right, so Estee Lauder, the high is right here, 201. The bottom is in November, okay, right around 100. Then she goes up, pulls back a little bit. Right over here, where we are now, looks interesting. I want to take a closer look at that because we know what the high is. We know what the low is, we know where she was, and we know where she is. I look at a 1-year chart, that's the first thing I want to know. High, low, where was it, where is it? That's it. It looks intriguing. Now I want to take a look at the 90 day. Last 90 days, which would be 3636. Alright, so that's an interesting pattern. Take a look. Goes up, down, up, down, up, down, up, down. Doesn't that sound familiar? But not only that, look, she's slowly going down. Where's she going down to? she's going down to the bottom of the 30-day period, or the 90-day period. Okay, here's the top, here's the bottom. Okay, it can only be one top, only can be one bottom. She's right there, she's bouncing off of that, so let's take a closer look and see if she actually is. Alright, typically, down, up, down, up, down, where we are right now. I like 2 days to the upside. This is one. Tomorrow could be potentially number 2, which means I'll be sitting on the edge of my seat first thing Monday morning to see if it's green or not. But that all depends on tomorrow. Is tomorrow going to be my second up day? Because you had 2 up days here. Very next day, red. No, that wasn't the new bottom. Wait a minute, that is the new bottom. Okay, but anyway, here we are. I'm kind of curious to see what it's going to do tomorrow. Tomorrow then Monday. I'm going to write Estee Lauder down for us to keep our eye on tomorrow. Next week. EL. Okay, so EL is on our list for Monday. I'm pretty sure someone's going to want to take a look at it. Could you dividend capture Macy's? Could I? Yeah, of course I could. Well, let's take a gander at it, because I like Macy's. Macy's is very generous to me. Okay, 1850. The 1850 is going for 41 cents. That is more than 2%. Okay, great. Remember rule number 1? Never buy something you don't know and you don't want to hold. I know who Macy's is. Okay, they've had a buyout offer earlier this year. They turned it down. Okay, so, and they're over 100 years old, and they've increased their dividends for more than 5 consecutive decades. Why isn't Macy's on your list? Should be a better question. But when's the right time to buy? Well, let's take a quick look. Here's your high, here's your low, here's where it was, and here's where it is. Slowly going to the upside. I like it. That's the 1-year chart. That makes me want to take a look at numbers a little closer. So a year ago, we were at 1549. We got a quadruple bottom, 1059. Look at it. 1, 2, 3, 4, 5 times. It hits that 1062 area. So we basically said, if you're looking for more confirmation than 5 times, we had September, October, and November. Okay, it hit the same, right around the same number, the same month apart, 3 times. So we have spoken. We are the buyers and the sellers. We create this crap. Okay, so what are we thinking? Well, we are thinking, here's the high, here's the low, here's where it was, here's where it is. That's what we're thinking. But what are we thinking next? For that, I want to take a look at the last 90 days. Okay, check it out, the last 90 days. Okay, here's the high, here's the low, there's where it was, there's where it is. Let's take a look at the movement. Look at it. It was up, down, nice flowing movement. Now we're right here, which is coming off of this high right here. So let's zoom in and take a look at the last 30 days. 90 days ago, that's 3 months ago, with 2019, topped out for the 90-day period, 2211. Now remember, there can only be one high, but anytime you're looking at any chart, there can only be one high, and there can only be one low. There it is, there and there. Where's it going next? That's the last 3 months. Well, I want to zoom in, and I want to see the last 30 days. Last 30 days. Okay, that is pretty clear to me. Okay, let me explain what I mean. Look, doesn't do very much the first 2 weeks of the month. Okay, but then it hits our 30-day high last week and hit our 30-day bottom yesterday. Now, even though today was a red day, now a red day means it closed lower than it opened, it's still a higher low. Okay, not that it's not a green day, but it is a step up. The low of the day is higher than the low of yesterday. So the low of yesterday is your possible 30-day new bottom. Now, if tomorrow's a green day or up higher, either a higher bottom or a higher top, one or the other, as long as it constitutes an upward trend, all right, then Monday morning, this will be on the list also. I'm getting all up in it first thing in the morning. Okay. I would say, you know what, new guy, I can't tell you what to do, but what I just told you what I'm going to do is I'm going to wait and see what happens tomorrow. And if tomorrow is a higher day, that's an indicator for me to jump into it on Monday. Okay? Because I like 2 days to the upside. You get one, even though it's a red day, it's still higher than yesterday, which means it's an up day. So if tomorrow's another up day, perfect indicator for me to take a look. Sitting Monday morning, and as soon as that bell rings, is it higher or is it lower? Yes, yeah. Okay, so that was Macy's. Estee Lauder was a no. Abbott Labs, ABT. Are you still looking for stocks that pay dividends 2 weeks out? Hey, Boston Ron, how you doing, man? Been a while since you've been here. ABT. Abbott Labs. Alright, now, Macy's got it. Yep, Noise. Sorry, dude, Noise and note. Will you check to see if they have an earnings report before the strike price, or does it matter? Bob, I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. There's no real correlation between upward movement and positive earnings, and there's no correlation between bad earnings and stocks going down. It is, over the years, it's not as proven as dividends. Dividends have a tendency to make the stocks go up. No matter what happens, the stocks have a tendency to go up coming into the dividend play with the stocks that I'm looking at. Boston Ron, okay. Okay, so that answers that question. Abbott Labs, first thing I want to take a look at is, what am I buying it for tomorrow? 105. Okay, 19 cents, nope. 88 cents, no. The numbers just don't work. So that means no. So you get a 90 days. So when Abbott Labs comes up for consideration again, we'll take a look at the numbers again. It's just not working this time. Okay, remember, Abbott Labs pays every 90 days. So every 90 days, I want to take a look at it. What holdings would you recommend for IRA? Dustbuster, you're relatively new here. Okay, I don't do IRAs. Okay. You have to decide how you want your what is your outcome here. My outcome is 1%. You know, week after week after week after week, because I need something to live on. Okay, so I live off the money that I make. So that's why I'm looking for a safe, predictable, consistent 1% per week. I want to make sure it's a good stock. Abbott Labs is a good stock. It is. Just the numbers aren't working this week. Okay, they may work next time Abbott Labs comes up for consideration. Other than that, I still have a whole bunch more companies to look at. I like how you do it. Julie, how are you? JWN. Yes, and you can do this in an IRA. Okay. Now, IRAs allow you to do some kinds of trades, and they don't allow you to do some other kind of trade. A covered call is one of the safest strategies it is. I sent you a DM for your last video. Okay. Okay, I go through my social media every day, so I will take a look and see if I can find it. Okay. Okay, so I like Abbott Labs. See you again in 90 days. Sorry. Next on the list, Pfizer. PFE. First thing I want to see, 28.85. The 29s are going for 32 cents, and that is over 1%. Okay? So Pfizer is giving me over 1% with the numbers. So now let's take a look at the stock and see what the chart looks like. Okay? Here's your high, your low, this is where it was, and this is where it is, and this makes me want to take a gander at it. Okay, so I like the 1 year. Julie, we're going to get to JWN in a little bit. A year ago, Pfizer was at 38.60, had a triple top. You see that triple top? The more times it hits a certain price, that's what you call resistance. It just doesn't want to seem to go past that. It hit it 3 times last year, and it didn't go past. So that's us, the buyers and the sellers, saying, hey, we don't think it's worth more than that. Okay, so that's the high of the year. So here's the low of the year. Where's it going now? When's the best time to buy a stock? At the bottom. Because when you're at the bottom, there's only one way to go. All right. So, triple top at 40.37. And it looks like we have a double. Is that a double or a quadruple? No, that's a double bottom at 25.13. Okay, so the last 90 days. Is that right? Yeah, 90 days, okay. Shoots up, pulls back, you get double bottom right here in April. Shoots up, pulls back, come down. Yep, she's coming down now. So there's no sense even going on further because you get your high, and your high right there. Now she's coming down off that high. All right, so that's that one. Bank of America, BAC. BAC. Alright, BAC is going to be a no. I don't even have to look at anything. Look at the chart. Okay? This is the high of the year right here. I don't want to be anywhere near there. That's the high of the year. That baby's going to come down. JWN is up next. Imagine that, Jules. JWN. Nordstrom's. It's going to be a no at the moment, but let's take a look at all the numbers just for you, Miss Jules. Alrighty. 2146 to 2150 is going to be my closest. The 2150 is going for 33. That's way over 1%. Okay, that's cool. Alright, but what's the chart telling me? High, low, where was it, where is it? Well, that's kind of interesting up there. But look where it is. It's getting close to the high. So let's zoom in and see what we're looking at. A year ago at 1791. Okay, we topped out. Matter of fact, we have a double top. Look at that, 2360. Okay. Back in July last year and last week. Well, that should be an indicator right there. Okay, your high was there. Your high for the year, way over there. And the high just last day, the other day. Yeah, that baby's coming down. Sorry, that's my opinion. I'm not telling you what to do. I'm just saying, logically, that's what it looks like. Because you can only have one high of the year, and there it is, 2359. Okay, it hit that and bounced right back down off of it. It did it, what is that, 9-10 months ago, and it did it again. So I said no to that one. Sorry there, Jules. Even though the numbers look good, it's just not the right time. See, look at that. Steadily going to the upside. And she's pulling back a little bit right now. There's your high. 3 days to the bottom. I'd wait for it to find its bottom before jumping into that. Because they do pay good premiums. BAC is one of my favorites. BAC is one of my favorites. What percentage of your account would you put into each stock? Oh, that's easy. This week I have I have 7 positions. I like to keep them even. Okay, with 7 positions, like 20. Wait a minute, it's like 18,000, 18,000, 18,000, 18,000. I like to keep the trades all even as best I can. Sometimes it doesn't work out that way. You're welcome there, Miss Jules. All right, what are we looking at now? Okay, JWN, it was a no. Siri, let's take a gander at Siri. S-I-R-I. Now, Siri is on Warren Buffett's list. And we don't know what it's doing. Okay, first thing I want to take a look at is the numbers. 262, yeah, no. Well, but there's nothing else. You know, yeah, you'll make your 1%, but there's nothing else there. And 18 million shares traded. So if I buy it at 262, sell the 250s, bring in 10 cents, I'm losing 12 right off the top. Yeah, that's a no. The numbers just don't work. Sorry. Sound is a no. Only makes sense. Well, Dustbuster, cool beans. All right, my eyes are having a hard time focusing. Ooh, got to hang out with my grandson today, Maverick. We went swimming in the pool. We didn't have a popsicle today. Damn it. Oh, we didn't have any chocolate either, but I did teach him how to snorkel. That's a good thing. Me and my little buddy went snorkeling. All right. Anyway, let's get back to what we're talking about. Cisco, CSCO, CSCO. Now, come on, you guys all heard of Cisco. All right. 4624, the 4650s. Nope, not 1%. Bomber. So it's no for Cisco. Sony. Somebody wanted to look at Sony last night. SONY. Ooh, that thing's choppy as hell. 8750. 8750. The 87's going for $1.15. You take 50 cents off of that. Not close, but no cigar. Not quite making you 1%. Sorry. DG, Dollar General and ACN. DG, ACN. Exxon Mobil is next on this. Well, I put those on the list. We'll take a look at them. But I like to go onto the list. Exxon Mobil. Now, Exxon Mobil's on my list. Much better. Okay, Exxon Mobil, 114. The 114 is going for 139. That is well over 1%. Awesome. Let's take a look at the charts because we know that the numbers work. The 1 year chart. We have our high, we have our low. It's where it was, it's where it is. Everything looks as it should. So let's zoom on in. A year ago, around 105.40. We got a bottom right here at 95.77. That was back in January. And then a top at 123.88. And that was in April. Mid-April. Alright, so there's your high, there's your low. Let's look at the last 90 days. Okay, take a look at that. Nice movement 90 days ago at the bottom. Moves on up. Great. Comes down, rebound, come down, rebound, come down, rebound, come down. Look at this. We got a new bottom here. That's a new 30-day bottom. Not a 90-day bottom, but a 30-day bottom. Alright, so I like the way it's moving. Let's take a look at the 30-day and see if we can make any money off of this thing. Now, I like the way that looks. Let's take a look. Okay, here's where we were. She drops a little up, drops a little up, okay? 520, just about 120. From there, she drops sideways a bit, comes up, drops down. 2 days to the upside, 1, 2. Tomorrow's a perfect opportunity. I'm sitting there waiting to pounce. First thing, 9:30 tomorrow morning. If she opens up green, perfect opportunity to jump in. Because that could be the 30-day bottom. Could be. For me, it's 2 days to the upside, and then I jump in. 1, 2, jump in tomorrow. I like to check it tomorrow, see what I have available. Is what it is, right? But let's take seasonality. See what this thing normally does this time of year. Okay, for those who don't know, the blue line represents the movement so far this year. The red line represents 10 years worth of data. That's the high, the low, the open, the close, all that crap over the last 10 years. 2014, 2015, 2016, 17, 18, so on and so forth. They keep piling on top of that. 10 years of charts. That is the average movement, the red line. Okay, so here's where we are right now, this little blue dot. I want to take a look at this area right here. Where does it look like it's going for the next 2 weeks? Because that's all I'm concerned for. I'm concerned to jump in, get my profit, hang out for 5 days, 10 maybe, and then be out. Ideally. Okay, I like it just before the dividend. Okay, so I'd like to see when they're paying their dividend. But the numbers and the chart all make sense. So ExxonMobil, as you can see, has a tendency to droop a little bit the next couple of weeks. But it's ExxonMobil, and you can't fight. You know, as much as you want to call, you know, seasonality, you can't fight the trend, because the trend is what we're buying now, which dictates what history is going to be tomorrow, and then the next day, and the next day. What we plan on doing tomorrow, because you got a 30-day bottom here. 2 days to the upside. One more is my signal to jump in. I'm waiting first thing tomorrow morning, see where it is. If I had any money, but I don't. Because all my money's invested Monday. Because I go Monday through Friday. Today's Thursday. So I usually don't buy on a Friday unless I have money available, and I don't. But we'll take a look at it on Monday. So I'm actually going to write ExxonMobil down and circle it. XOM. Okay, that's for next week, because, well, also going to depend on, what do you call it, when they pay their dividends, because that's the important part. All right, so let's get back. That's ExxonMobil. Next on the list, BX. Blackstone? Oops, BX. Blackstone, I was right, okay. First thing I want to see, 1930s, what I can buy it for. The 19s are going for 243. That's over 2%. Even though I am losing 30 cents, it's 243. So I take 30 cents off of there. Then I'm looking at, what was that? Right there, 19s. No, the 19s right there. 243. I take the 30 cents off. I'm at 213. Now 213 on a 119 stock, that's almost 2%. But the question is, do I like Blackstone? Me, I really have no idea who they are or what they do. Okay, I have no idea. This is just someone's suggestion I'm taking a look at. I don't even know if they have 20 years of increased dividends, because I've never really heard of them. Alright, that being said, let's take a look at the chart. There's our high, there's our low. Here's where it was, and here's where it is. It's in an upward trend for the year. Okay, that's plain to see. Okay, here she was a year ago, and here's where she is now. It's a nice upward trend for the year. Let's take a look at the last 90 days. Let's take a look at the numbers first. Okay, a year ago, 84.88. That's the bottom of the year. The top looks like it's a double top at 133.89. If it's not, it's pretty close. Okay, the end of the year, okay, December 28th, and somewhere, looks like towards the end of March. Okay, so let's take a closer look. The last 90 days. Okay, last 90 days, here we go. Sideways a bit. Oh, here's the top right there. Back in mid-March. And look, now we have a double bottom again. End of April and the beginning of June. Well, let's take a look. Where's she going? 90 days ago, 125.48, topped out at 133.60, okay, and then bottomed out here twice. So let's take a look at that. 115. And so it hasn't seen 115. That's 115, that's a little bit higher, but it's close. Let's do the actual reading of it. Okay, on the 1st of May, 115.82. The 29th of May, 115.98. The 30th of May, 116.06. Alright, so it's pretty close. Let's look at the last 30 days. And that goes back to 5656, right? There we go. Okay, so let's take a look at the last 30 days, and it's pretty evident to see it. 30 days ago, here we are, right at 119. She shoots on up, hits 133, comes down, rebound, down, makes a new double, 30-day bottom right there. Now she's going to the upside. Pretty plain to see. Okay, so it's really not that difficult. She goes up, pulls back, goes up, and it's going to go up to a point and it's going to pull back again. But you really got to like Blackstone, and I have no idea who Blackstone is. So it wouldn't be, I don't know if it would be a pick for me. You know what, we haven't done this in a while, at least not tonight. Let's go to BX and see what BX looks like. What are the dividends looking like for this company? That's my concern at this moment. Hey, Rick, good evening. How are you doing today? All right. So, BX, if I was going to buy it and hold on to it, look what it's going to pay me. 2.82 per week per year. Okay, I'm showing you how to do a nice percentage per week. That's 2.82 for the year. Okay, I'm showing you 1% per week. That's way more than 2.2 for the year. Yeah, sorry. Historical data. That's what I wanted to see. I got a little distracted. I saw that. Made a nice premium BX this week. 119 strike price. Cool beans. All right, historical data. Here we go. I want to look dividends only, and then I want to look at the maximum amount of dividends. How long have they been paying dividends? 2007. So what is that? 17 years? They're getting close. Let's take a look at the numbers and see how often they increase. 30, 30, 30, 30, 30, 30, 30, 30, 30, 10, 10, 32. Whoa, 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 whoa. Why are we going up and down? 30, 10, 10, 10, 32, 20, 10, 10, 22, 10, 10, 10, 42, 32, 23, 58, 55, 78, 89, 74, 87. All over the place. There's no consistency here whatsoever. Okay, when I say I like companies that have 20 years of increased dividends, Blackstone doesn't make it. Don't get me wrong, I mean, they have 17 years of dividends, but not increased dividends. So if the stock goes down, okay, because that's what they do. They go up, they go down. That's all they do. Okay, take a look. Shoe up, down, 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 up, down. That's all they do. Okay? They don't do anything else. They go up, they go down. And that's it. I gotta plug the phone in there. Whoops. Didn't get to plug it in. Alright, we're almost done. My shoulder's starting to get sore. I shouldn't have been doing that work yesterday. Alright, so you made money on the 119s. Ooh, check it out. The 119s next week. You can roll that thing forward for 243. The 119s. Nice. Alright, so BFA. BF-A. That's not going to pop up. Yeah, it doesn't pop up like that. PAA. What is PAA? Isn't that Plains All American? Plains All American. I don't know. Alright, first thing I want to see, what am I buying it for? 1703. The 17s, nope, not enough money. Now, I have bought PAA before, just not this week, because the numbers just don't work. It's actually that simple. A good quality dividend stock with 20 years or more of increased dividends, weekly options. Do the numbers work? First thing I want to know. Do the numbers work? Is it worth my effort? Now, if you're okay with bringing in 0.5% a week, that's over 24% per year. Okay, you guys, you're missing the fact that 1% is 50% per year. Okay, that's nice. But worst case scenario, what if I only did this and got 0.5%? Well, 0.5% a week is still 25% per year. That's really not that bad. Okay, if you can't find one that gives you 1% and you really like the company, you say, you know what, I like the company, let me buy it, great, I make 0.5%, that's fine. 0.5%, 52 times a year is 25% per year. And there's nothing wrong with that. It just doesn't work for me. Sorry. All right, next on the list, PNC. PNC. Okay, first thing I want to look at, what can I buy it for? 57.20. Is that right? Yeah, that's kind of a big spread. That should be closer to 155. Because the 155s make sense. The 157.5s don't make sense. You see, I don't like it when the market maker does this. Because first thing tomorrow morning, these numbers are all going to change. Which means, where it doesn't make sense now, because the last trade was 154.97. Hypothetically speaking, it should be 155 or 155.03, not 157.20. Because you go 157.20, you're one strike out of the money where you shouldn't be. You should be at 155, which is paying 245, not the 157.5, which is only paying 135. You see, so tomorrow morning, these numbers will change, and hopefully it's more realistic. Because when you have 1.3 million shares trading in a day, the market maker should have a 1 or 2 cent spread, not whatever spread that is. That's $4.50, something like that. $5. I don't know what it is, but that's a big spread. It should only be 1, 2, maybe 3 cents tops, not $4 or $5, or $3 or $4, whatever it is. All right. That being said, next on the list is Dollar General. DG. 129.61. The 130s. That makes more sense. Look, 129.61. That's what I can buy it for. The closest strike price, the covered call that I'd be selling, would be the 130s for next week. 209. That's more than 1%. Great. Well, what does the chart tell me? The chart tells me here's the high over here, here's the bottom, and this is where we were, and this is where we are now. Okay, I want a better look at this. But I'm okay with what I'm seeing here at the 1 year chart. Because it's not a high and it's not at a low, it's somewhere in between. And it looks like it could be going in a direction that may or may not be profitable. So let's take a closer look. A year ago, we were at 156.41. We got a double top at 173.47. Bottom at 101.42. So we know what the high is for the year. We know what the bottom is for the year. Okay, the high was back in August, and the bottom was in mid-October. All right, last 90 days. Last 90 days, she's in a downward trend. See that? From here, going down, that's easy to spot. That's why I like looking at the 1 year, the 90 day, the 30 day, and then the seasonality. The 90 day is telling me what kind of a trend it's in over the last 3 months. Okay? What is it doing for the last 30 days? That's more important to me because that gives me an idea of where it's going next. Last 30 days. 30 days. Okay, check that out. Here we are 30 days ago, 138. She jumps up to 148. Okay, 138 to 148. Well, of course, it's going to be profit taking. There was a rebound, more rebound. Look at that. When you see a day this big, there is going to be a return. And that exactly was. And when you have a return that big, and another one following, of course, you're going to have a pullback. Because there's just so much activity going on. She dropped really good from 144 all the way down to almost 126 in one day. Well, of course, the next day is going to say, oh, that's too low. So, because that's the new bottom right there. Somebody recognized it because they jumped in the next day and it started driving way back up. Right. So anyway, it looks as if it's going to come down, find a new bottom, then turn around and go up. So this is 4 or 5 days away from whatever play we might be thinking of for Dollar General. It might not make it this week. Definitely not going to make it this week, and it doesn't look like it's going to make it next week. From what we're seeing now, okay, there's always a chance that things could change over the next couple of days. All right, Walgreens, WBA. Now, we've been keeping our eye on this one. Walgreens is an interesting little critter. WBA, because they got a lot of bad press lately. Okay? First glance at the chart, you think, oh, hell no. You're thinking it all wrong. Look, there's your high a year ago. Where are we now? Okay, last week we're at the bottom of the year. That's a downward trend. Well, my friends, it'd only be one top and one bottom. We already know where the top is. And this right here is a prime candidate for being the bottom. When the best time to buy a stock? When it's bottom, and it's at the bottom now. Okay, so I like 2 days to the upside. What do we got? We got a lot more than that. Well, let's take a look. Okay, the high of the year, 32.89. That was about a year ago. Boston, bottom of the past 15 years. Wow. Well, you never know. It's either the bottom of its lifespan, or it's the bottom of I don't know. They've been in business for over 100 years. They're in over every major city in the United States. I honestly don't know what's going on with the company. I'm just waiting for the finance bottom, get 5 days off of that, and be okay. Alright, so it's at the bottom. So it lasts 90 days. Still have that downward trend. And look what happened this past couple of weeks. That's what I want to take a look at. 90 days ago, we were at 21, somewhere in the 21 area. Okay, a week later, we're at the top, 22.03. Okay, and she drops down to the bottom. The bottom was last week, the 29th, and that was 1462. All right, last 30 days. Here we go. Look at that story. Okay, sideways a little bit. Here's our 30-day top. Here's our 30-day bottom. Okay, 2 days to the upside. Didn't quite make it. Well, that could have been, but anyway, here we are now. So is she continuing down? I don't know. It's an I don't know. There's no clear-cut path with this one. Okay, because she went up, she should have kept on going if she was going to. But no, we can't quite figure out what's going on here. It makes me kind of wonder. I want nothing more to do. I want nothing more for that to go up, up, up. Well, we got to find out, make sure it is the bottom, because there's no clear-cut decision there. I like 2 days to the upside. So we had 2 days to the upside, and then she pulled back. Okay? I need another 2 days to the upside before before it, it's officially the bottom. But it kind of looks like the bottom. Kind of. Okay, we won't know until we get further on and it starts to move up. It's just that plain and simple. It's not the bottom until it starts to move back up. Alright, so that being said, Paramount. Did we look at Paramount already today? Oh, let's take a look at it again. P-A-R-A. No, we did look at Paramount today. Alright, so this is kind of like the same way. And I actually have Paramount. Cool beans. Alright, so it's at $12 right now. What is 12 going for? 36 cents. Now, if you went to school, you know 36 cents is 3% of $12. Alright? So, what does the numbers look like? Well, I like these numbers. Let's check on the chart. Low battery. I got a low battery. A low battery. And there we go. Alright, give me a second while I take care of these people over here. Alrighty, that should do it. Alright, so it's plugged in now. Alright. Alright, so where was I? Paramount. Okay, so it's 3%. I can buy it tomorrow, $12. The $12 strike price for next week is 36 cents a share. That's 3%. Okay, what does the chart telling me? The chart's telling me here's the high, here's the low, here's where it was, and here's where it is now. I'm not liking this right here, but let's take a look at it. A year ago, somewhere around 1554, We got our top of the year at 1753. Look at this thing. Big drop, big jump, big drop, medium jump. Okay, so anyway, we got our bottom of the year, a double bottom. Okay, once in March and again in April. And that was right around $10.12. Last 90 days. 3 months ago, take a look. She goes up, down, up, down, up, down. This has a lot of moves. Up, down, up, down, up, down, up, down, up. Now she's on the downside right now. Okay? I would keep an eye on it, because here's your 30-day bottom, your 30-day top. It's going to keep coming down. Alright, so last 30 days. Here we go. Yep, that's a clear cut. Look at it. To the downside. Okay? Down, up, down, up, down, up, down, up. The gap. Nice big gap up. It filled. You like that? Gap up. It filled. Now we're at 1197. Looks like she's going to keep coming down a little bit. I'm into it at 12. No, I'm into it at 1198, and I sold the 12s. So I have no problem holding on to it. I have no problem getting rid of it. It's Paramount. I have no problem holding on to it. All right, so that being said, that's Paramount. AVGO. Yeah. Why do people do that? $1,400 a year. If you think I have that much money, yep. Wrong. I don't. SUN. Didn't we look at this the other day? It's a no. Okay, even though I know who they are and a household name, it's a monthly, and it never pays a decent monthly. Look, $54.93. The 55s, you go for 45 cents. That's not even 1%, and I've got to hold it for 3 weeks. Look, yeah, 3 weeks, and it's not even making 1%. Monthlies usually never work, unless you like doing it once a month, and you get what, 12 to 20% per year. Okay, so Sunoco was a no. COP, that ConocoPhillips. That ought to be interesting. Check that out. 113.30 to 113. Yeah, it's not making it. I was kind of interested in taking a look at this. That's a big fat drop. That's a lot of red there. But it doesn't make it, so there's no sense even looking. Sorry. EC Rider is a no. Sorry. Monthly. Didn't I just finish saying monthly the numbers just don't work? Okay, 12, 13, 12s, 50s go for 5 cents. Yeah, 5 cents? Come on, no. That's a big fat no, EC. Disney. Who wanted to look at Disney? That was from last night, wasn't it? 101. 101.20. Oh, check that out. Did you see that? 121 was the last trade. Bid 101.21, 101.06, 101.20. Both are lower. Market maker's pushing this bad boy down. Alright, so the 101.20, the 102s go for 95, the 101s go for 40, 140, take 20 cents off that, 120. Yep, the 101s make it. Okay, so the 101 makes 1%. Great. But what is the chart telling us? Okay, so let's find out what the chart is telling us. Here's our high, here's our low, here's where it was, here's where it is. It's in a downtrend at the moment. I want to take a closer look at that, okay, because the numbers look good. I just see what the movements look like. A year ago, at 92.02, looks like we have a almost a triple bottom at 78.94. Okay, that was beginning of October and the end of October of last year. Okay, so you got looks like a triple high at 123 towards the end of March. Okay, but from the end of March, check that out. You can't mistake that for anything. She drops, a little bit retraced, gaps down, and then continues dropping. 2 weeks ago was your bottom, has no real direction now. NLY. I've never heard of NLY. So usually when I never heard of something, it's usually going to be a no. You know what? Not wait, will disappoint her now, or him now. Usually a no. Okay. Oh, it's a REIT. And it has weeklies. And the chart looks interesting. That just, why does everything sound good but make me fuss crawl at the same time? It's REIT, it's an ETF. I think, yeah. And I hate to admit if, you know, actually halfway decent. So let's go put it, wait a second. NLY. Let's put it in Yahoo Finance and see. Am I really that old? I keep forgetting. And I just saw it. NLY, right? NLY. Okay. Annaly Capital Management, NLY. That's a no already. Knew something smelled fishy. Okay. Take a look. We started paying dividends in 07. So that's only 17 years. 17 years of increased dividends. Not 20. But let's take a look at the numbers. 96, 104, 30, 136, 192, 220, 220, 240, 270, 3, and it starts going down. 240, 228, 222, 180, 160, 140. Isn't that going the wrong direction? I'm just curious. $120, 14, 106, 89, 31, 120, 188, 88, 65. Isn't that going the wrong direction? Okay, I knew there's something I didn't like about it. Which is kind of sad, because these numbers looked okay, and this chart looked okay. And it's a REIT. So yeah, unfortunately it's a no, because the dividends aren't consistent and they aren't going in the right direction. But I'll take taking a look. They pay out like 98% of the profits. Okay, 98% of your profits, you say. Well, the 98% of their profits comes to a grand total of 13% per year. Not per week, not per month, but per year. Okay, I'm showing you a strategy how to get 1% per week. 1% per week is 52% per year or more, and you want me to do 13%. I'm not getting the drift. Okay, number one, the yield is not that great, even if they are paying up 98% of their profits. 98% of their profits is just not beating the 50% per year. Okay, it's only giving you 13.06%. But I don't tell people what to do with their money. You know, that's what you want to do, that's what you want to do, you know? But, okay, so they have a dividend. But the dividend's then slowly decreasing over time. I have used your strategy once with NLY and scored the premium and the dividend. Secretariat, way to go. Hey, James, what about AGNC? Didn't we just look at AGNC? No, AVGO we looked at. No, AGNC is on the list. Alright, AGNC is on the list, and we won't get to it tonight because it's 20 past 11. 10 more minutes. Anyway, alright, so, I'm sorry. I don't like it because of the dividends. Alright, but let's take a look at the numbers. Just, you know, a year ago, 1977, okay, basically the same place, 1999. Alright, looks like we have a triple top at 2113. That was mid-June, end of July, and mid-September. Okay, so it hit your resistance 3 times. Okay, that's your resistance 3 times. And here's your bottom, late October. And that was 1460, somewhere in that area. Okay? Let's look at the last 90 days. Okay, last 90 days, first thing I want to see, high, low, where was it, where is it? Here's where we are now. I kind of want to zoom into that, see what that looks like. And there you go. That's pretty not bad. Okay? She goes up, pulls back, 30-day top, 30-day bottom. She's going to the upside. Now, is she continuing to go to the upside, or is she starting to turn? I would be concerned with where she opens up tomorrow, if I'm thinking about getting into it, but I'm not. It drops on the EX date. It drops after the EX date, and not before, because stocks have a tendency to go up before the EX date. And when is NLY? NLY. The 20, nope. NLY. Okay. NLY has its dividend the end of June. That's the end of this month. Interesting. Okay. So we're here on the 6th. NLY is right there. I don't know how it got on my list. Maybe it was on Warren Buffett's list. Maybe. Oh, I put it there, so it's not on my list. Okay, so anyway, I would, if I liked it, I would buy it this week here, which is next week, depending. What is she going to do tomorrow? Is she going to continue the upward trend, or is she going to go sideways, or is she going to go down? That's an interesting one for next week. Procter and Gamble. Ooh. AGNC. Isn't, yeah, AGNC is on the list. Right now we're looking at Procter and Gamble. PG. That's going to be a no. It's at the high of the year. Sorry, it's a no. I don't buy at the high of the year. I don't care what the trend is. Seriously. Let me get low power over here. Ooh. AGNC, another REIT. I don't know. Alright. Let's take a look at AGNC. AGNC. $9.77. Yeah, that's going to be a no. The numbers just don't work. Look at 977. The 10, 0. The 10s, 3 cents. Really? That ain't worth it. The 950s, 25 cents. But at 950, you're losing 22. They say you're only making 3 cents. Yeah, no, the numbers are horrible for AGNC. Alright, so ACN. ACN. Alright, I try to stay away from stocks over 250, but let's take a look. Why not? 296. 297s. 295. Yeah, the numbers don't work. Sorry. Comcast. CMCSA. You know what I like best of Comcast? Last I knew there was 64 million subscribers on a monthly basis writing them a check. I mean, who came up with that idea? That's an awesome idea. 64 million people writing you a check on a monthly basis. That's nuts. Alright, let's take a look. 39 to 39, they go for 57. That's well over 1%. Great, that works. What are the numbers? Well, there's the high, here's the bottom. This is kind of interesting. Let's take a look at that. A year ago, we opened up at 39.58. We got that top 47.51. Okay. Last 90 days. She's in a downward trend. Check that out. Woohoo! Alrighty, so what's going to happen? 90 days ago, 42.68. She dropped, a little recover, drops, finds the bottom on the 26th of April. Okay, 36.43. From there, she shoots on up, pulls back, shoots on up, pulls back. See where we are now? No idea of where we're going. Up, down, but it's still coming down. So this is going to be up for consideration for what? Is that, a week or so? About a week, maybe two. So Comcast in a week, maybe two. So I'll write that down for next week. Now she won't even make a consideration for next week. Maybe the week after. So I'll go 2 pages over. 2 pages over for Comcast. CMCSA. Here we go. See, that's how we work. Take a look at opportunities. Comcast is a great company. 65 or 64 million people paying them a monthly subscription every single month. Okay, she goes up, she goes down, she goes up, she goes down. Now we're waiting for her to come down again. It's going to take 3 or 4 or 5 days maybe before she comes down, before she turns back up again. I want to be there when she goes to the upside. Alright, one more and that's going to be it for the day. TSM. Who the heck is TSM? Taiwan Semiconductors is a no. Okay? We're at the high of the year again. We're at the high of the year yesterday, high of the year again today. Today's a down day. Okay? But she opened up higher. Okay. Today's close. Alright, so she opened up higher, but the close was lower than the close of yesterday. That makes sense? Alright. Coney. Oh boy, someone stuck this in here again. We said no to Coney the first time. Okay, and Coney down today. And it gapped down today. Okay, look, 30-day top, 30-day bottom. Here she is. Now she's pulling back. Big gap down. That should come down a little bit further before that gap fills, hypothetically speaking. Okay, Michael, Tesla's a no. Tesla doesn't have dividends. They don't share the profits. They do not play nicely with the other children in the playground, so it's a no. Yeah, we didn't like the dividend in Coney. Oh yeah, that's right. They didn't even have a year's worth of dividends. Thanks, Michael. Alright. I think we are done for the night. Let's just take a look at JD. Why not? JD. Somebody suggested this last night. 29.79. Now we did JD earlier this year. 29.79. So I'll look at the 30s. The 30s are going for 64 cents. That's 2%. That's over 2%. Great. All right. So let's take a look at the chart. Here's the high. Here's the low. Here's where we were. Here's where we are. I want a better look at that. All right, Michael. We'll do John Deere tomorrow. Actually, wait a minute. Yeah, tomorrow night we'll do John Deere. All right, a year ago, 38.87. We topped out in the end of July at 42.15. The bottom of the year in the middle of January, 20.97. Which is a nice upward trend since then. Let's check that out. Nice upward trend since then. But look at this pullback from the high. She stopped, turns around, goes back up, and then a little hiccup right there. I want to get a closer look at that. Here we go. Last 30 days. Check it out. Little pullback up, made our 30-day top, made our 30-day bottom. Okay, we are going to the upside, but a little bit pullback today. What's that all about? Okay, JD at the moment is paying 2%. But do you like JD? Okay, there's no, well, it looks like it should be going to the upside. What was this all about today? That should fill tomorrow and continue to go to the upside. Because here's your 30-day top. Here's your 30-day bottom. Hypothetically speaking, she's going to the upside before she finds the top, turns around, comes back down again. Does JD only pay dividends once a year? That is correct, Julie. Pays it once a year, and I believe they already paid it this year. Okay. And that's it for the night. My eyes are heavy, my sights were dim. I had to stop for the night. And there she stood in the doorway. I saw a mission bell. Oh, I heard a mission bell. Okay. Good night, you guys over here on Instagram. Instagram is done. Tra-la-la. Facebook, you're done too. Tra-la-la. Alright. Yahoo! Oh, YouTube. Not YouTube. Okay, you're done. Whoops. That didn't work out right. Supposed to turn it off. Bye. Alright, that one's off. Alright, so you guys will catch you again tomorrow. And lastly, you guys have a great night. Maverick, you have a wonderful day. And we will see you again tomorrow. We'll swim in the pool, have some watermelon, and some chocolate, of course. And popsicles. Yeah, Papa G's. Wait, my